Welcome to the Forex Basics 101. It's Ian from CPP Trading, and in this video you will learn how to correctly read a currency pair and currency quote. This is purely educational and we'll get started right away. Look at a few examples on trading Forex. These are some of the very common pairs: the Euro versus US dollar, the GBP JPY, and XAU USD. So they stand for obviously the Euro versus the US dollar. GBP is the Great Britain pound versus the Japanese yen, and XAU is gold versus the US dollar. I'm also going to include the symbols here just for your reference. So we have the symbol here for the euro and the dollar, obviously, and then we have the pound, British pound, Japanese yen. I'm going to use this for gold now for this purpose, and again the US dollar. Let's look at an example here. I'm going to focus on just one currency pair just to keep it simple, make it easy for you guys to understand. Let's look at the euro dollar. So the first one is always the base currency, and the second one is called the quote currency. Again, what you see on the left, the first one is always the base currency. Second one, the one on the right side, is always the quote currency. And it's always about the relationship between two currency pairs, because you always have to pay with one currency in order to buy another one. And also a little bit of a misconception. Some people think that the first one is always the currency you buy, the base currency, but that's technically incorrect, because you can go long and short. So you can buy or sell the base currency. So when you're trading Forex, you can go long and you're buying, for example, here the euro. And when you're going short, you're selling the euro, and then later on you're buying it back. Now we have an exchange rate here of 1.0933. So this is the exchange rate between the euro dollar. You often see it written with two different numbers. That is when you have a bid and ask price, which is the case when you're trading. This is a different topic. I'm going to focus on this and explain this in a whole separate video. So make sure to watch that video as well. Now the price you see, the exchange rate is always based on 1 unit of the base currency. So for 1 euro, it's $1.0933. So you have to pay $1.0933 in order to buy 1 euro, and you get the same price, $1.0933, when you are selling 1 euro. You would be buying the euro when you are expecting its value to go up, and you would be selling the euro when you are expecting the value to go down. This is, for example, if you do a technical analysis and you anticipate that the price will move in a certain direction. So if you believe that the price will go up to, say, 1.0999, you would be buying. If you believe it will go down to, say, 1.0800, you would be selling the euro. And again, you can always go long and short. So with any currency pair, you can both buy and sell. Let's look at the chart here just to make it a little bit easier to visualize the process of buying and selling. So again, we're looking at the euro dollar. On the bottom, we have the time and date. So that's always either the time or the date, depending on, of course, what time frame you're looking at. In this case, we have from December 1st to December 7th. So over the span of a few days, of a week to be exact. And we have the price point starting at 1.0933, and it would go up to 1.1 on the top and go all the way down to 1.08. So the price can go up or down. The blue line is representing an increase in the value of the euro. So if the price is going up to 1.0999, and the yellow line is representing a decrease in the value of the euro. So from the same starting point, the euro is dropping in value and it goes down to 1.08. That means you would be selling the euro. So you would be buying it when the price is going up, and you're selling it when the price is going down. Again, this is always based on 1 unit of the base currency. So whether the value is going up or the value is going down, and the same applies to any other currency pair. I hope you took some notes. I hope you enjoyed this video. Make sure to watch the other videos of this series, and I'll see you in the next one. Take care, trade safe.